Welcome to When Good Things Happen, where our mission is to inspire people to discover and learn about all the things that can really make the golden years the very best of your life and share a few financial ideas to help you make your vision for retirement a reality. Host Tom Gandolfi is your guide on a how-to adventure to help enhance your retirement lifestyle.
Welcome back to When Good Things Happen. This is Tom Gandolfi, your host, and I want to thank everyone for tuning in again. As you know, if you've listened to our podcast in the past, we really kind of focus on bringing people in that have interesting stories or things to share that can help make your retirement better, whether that be talking about things that might be on your bucket list or some things you might be able to do to improve your lifestyle or your finances. And that's really been the foundation of what we've done. Today, we're going to switch it up just a little bit. And we're going to switch it up because got a lot of comments and requests from folks lately asking me to talk a little more about, how you really go about making sure that you're in the right place for retirement financially and that you've got the portfolio and the tools you need to succeed moving forward and really enjoy the best years of your life. So I'm going to try to break some of that down today. And for those of you that know me, you know that I kind of like to handle things in an educational sort of way. And I like to do that with my clients because it's very important to me that we start out on the same page and we remain on the same page throughout the course of our relationship. And not everyone's real keen on talking about finance or even learning about finance. It's sort of a bad word to some people. Some people aren't interested. Some people have a tough time navigating the different terms and strategies and terminology that's used in the industry. So I always try to break things down in a simple way and in a way that everyone can really understand, because that's important. This is your money we're talking about when we look at building a retirement plan or building an investment portfolio to support that plan. And what I'm going to do today is, rather than just boring you with a podcast filled with financial terms and a bunch of blah, 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 blah that you probably don't want to listen to, I'm going to try to talk about how you build your financial house in a way that is a little more maybe user-friendly and maybe in a way that some people can understand better than they would if we just talked about this strictly using industry terms. So I'm going to kind of start out by asking you to picture in your mind your home. And your home is obviously built on a foundation. It has walls. It has a roof. And I want to start looking at your portfolio and your financial plan as your house. So let's kind of use that context as we go through our discussion today and talk about building a financial plan that you know you're going to be comfortable with for the rest of your life, and it's going to keep you safe and secure and do all the wonderful things that your house does for you now. Keeps you comfortable, weathered from the elements, and really helps you not only enjoy your lifestyle, but thrive. So when you talk about a home, obviously it starts with the design. Any of you out there that are listening that have built a house before knows that the design of the house is obviously very important to the end result, and it can be a little frustrating, and it can be also a learning experience. You can start out with an open mind, or you can go in with a pretty good idea of what you want, but the end result is you want to design something that's going to make you happy, that's going to take care of all of the things that I mentioned just a minute or two ago, as a reminder to keep you safe, allow you to be relaxed, and offer you a strong basis for which you're going to be able to really thrive in retirement and throughout the rest of your life. So designing that home is more than just planning it out and coming up with a blueprint. Ultimately, you need to start when you design with an idea in mind of what you want it to look like when it's finished. Well, the same can be said about a financial plan. And many of the folks that I work for have heard me say that we want to start with the end. And when you start with the end, it gives you a good idea of what the big picture is going to look like. And then it gives us a way to work backwards from the end to where we are today and make sure we can do the things we need to do to get you to the place you want to be ultimately. So when you build your house, you want it to be strong, you want it to be sustainable, you want it to be flexible, you want it to take care of you. Same could be said for a financial portfolio. It needs to be able to thrive in good weather. When it's warm outside and it's summer and it's sunny and the weather's great, you want to be able to enjoy the sunlight. You want to be able to crank up the air conditioning when it's 96 or 97 degrees outside so you can stay comfortable. You also want that house to take care of you when the weather's not good. So when we have rainstorms or snow or other inclement weather, you want the house to be able to keep you insulated from exposure to the elements. Same thing that you're looking for out of a financial portfolio. We know moving forward that there are going to be some days, some weeks, some months, and some years that are really good, kind of like a sunny day. We also know that there are going to be times when there are clouds overhead. There might be some uncertainty in your future. Perhaps it's health related. Perhaps it's stock market related. Perhaps it's tax related. So we want to be able to build something that's going to allow you to enjoy the good days, but also weather and thrive in the during the bad days as well. So that's sort of the background for designing your financial house, if you will. Start with a strategy, and that strategy is going to determine really where you end up, and the strategy needs to be built based upon where you are today. So if you're looking to build a home that is going to allow you to start a new family, as an example, and expand and have extra bedrooms and extra room, well, you want to build a house that's big enough to take care of all those things. If maybe you're building a house to downsize from your current house, well, you're looking probably more for creature comforts and efficiency in lifestyle. Maybe you want to have everything on one floor. So you want a strategy of what you're looking out for. Most people that are looking to build a financial house for their retirement want to make sure that it provides them with security, it provides them with some flexibility, and it provides them with a way to navigate all the challenges that they're going to face in retirement, some of which are good and some of which are a little more on the challenging side, quite frankly. So you want to start with a strategy. After you've decided where you want to be, so let's use sort of an example as someone who maybe is approaching retirement. Maybe they're in their mid-50s, late 50s, and they're really taking interest in making sure that they're financially in the right place moving forward. Well, there are going to be some things that they're going to have to account for. They know that as they get to retirement, they're going to probably have to replace the income that they lost when they were still working. They probably are going to have to come up with a plan for medical expenses. They're going to probably have to come up with a plan for taxes, because taxes in retirement are much different than they are when you're working. And they're probably going to want to come up with some kind of plan for family and legacy. Maybe they want to leave money or assets to grandchildren or a charity or brothers and sisters, whoever it may be. So all of those things have to be taken into account when you're designing this financial house, much like you would a residential home. When you're designing it for yourself, you want to decide if you're using brick or different floorings or carpeting, whatever it may happen to be. So you want to get your strategy straight. Once you've kind of decided where you want to go, and someone in their stage of life where they're approaching retirement probably is looking at the factors I just mentioned. And they're going to need income. They're going to need a medical plan. They'll need a tax plan. They'll need an investment strategy that supports all of those things. So when you build a house, you're going to start with the foundation. Well, the same thing's going to happen with your financial house. So the first place to look when you start construction is the foundation. The foundation is generally going to be based on accounts or assets that have some type of guarantee. See, the foundation's what holds the whole house up. So you don't want a foundation that develops cracks. You don't want a foundation that sinks. And to liken that, again, to a financial portfolio, you probably need some things that comprise your foundation that are safe, that have a guarantee. This would include your checking account, your savings accounts. Maybe it's CDs or money markets, things that are potentially protected by FDIC. Could be government bonds that are protected by the U.S. Treasury Department. Could be something like an annuity that's protected by the insurance company that issues it. So when you build a foundation, this is looked at as your safer money. So it's money that's not exposed to stock market risk, and it's money that you can count on to be there not only today, but well into the future. So that's the beginning of your construction project. You want to build a foundation. You need to have an emergency fund. That's where the checking and savings come into place, probably the savings more so than the checking. But your foundation, while its job is to hold up the rest of the house, also has to be able to allow you to do simple things like keep up with inflation. The safe money that you have, especially that money that's held in banks at this point, is probably not generating much of a return. There's probably not much interest to be earned. So that's where some of the other potentially guaranteed pieces that could build your foundation, such as annuities, might come into play. Government bonds might come into play. So your foundation needs to be safe, but it also needs to provide you with some potential for the future. After you put the foundation up, you probably need to look at walls. The walls of your house are really what are going to contain you and keep everything centered where you want it. So the walls of a financial portfolio I would liken to investments that are designed to generate income for you. So this might be something like a corporate bond or a preferred stock or a BDC or a municipal bond or real estate investment trusts. So the walls are going to do the job of replacing the income that you walked away from when you decided it was time to retire. The walls are really, really important, just like they are in your personal home. Without walls, you don't have a house. So having a strategy to put in place the instruments you need to build good walls, in this case, income investments, is really, really important. Once you've addressed the walls, you've got a foundation now. Your foundation is comprised of safe investments, things that have some type of principal guarantee. Your walls are comprised of things that are going to generate income for you to replace the income that you left when you decided it was time to retire. And now that we've got the foundation, the walls up, we got to put a roof on it. Every good house has to have a roof. When you think about a house that you might build, the roof is obviously the highest portion of the house. It's what goes on last. Well, with your financial house, we're going to look at the roof as investments that have high growth potential or higher growth potential. So when we think about a roof, you're looking at things like individual stocks, mutual funds, ETFs. There could be other things involved in that as well. Could be commodities, such as gold or silver. Different things could comprise the roof depending upon where you are with risk profile and what you've decided you want your house to look like. So, sort of to recap, we've just constructed a house, and in financial terms, we've got a foundation. The foundation is your safe money. It is going to be comprised of investments or accounts that have some type of principal guarantee. Could be something as simple as a checking or savings account or a money market. Could be CDs issued by banks. Could be government bonds issued by the U.S. government. Could be annuities issued by insurance companies. And those things, because they're guaranteed, are going to be the basis of your foundation. Everyone's probably heard of Warren Buffett. And Warren Buffett is really thought of as the most successful investor that our country has ever seen. And Warren Buffett has all kinds of quotes and things that people have said about him and things that he's said about investing and money in the past. And, he has rules. And rule number one is never lose money. So that's where the foundational accounts or investments come into place. You want to have some things in your foundation that aren't going to lose money. That's your basis. Next are the walls, obviously. They're going to be your income investments. Corporate bonds, municipal bonds. Could be hard assets such as oil, natural gas, real estate. Could be business development companies. Could be preferred stock. Could be real estate investment trusts. So the walls represent your income stream, and the roof is really where the growth is going to come from. And, you've seen as you drive around neighborhoods, different roofs have different shapes. Some people want really high peaked roofs. And kind of bringing that back to financial terms, that would be investments that have a high ceiling. Well, high ceiling investments are going to also have more risks. So those are not necessarily appropriate for everyone. But most people are going to want some type of modest growth potential, even if they're very, very conservative investors. So the roof is important. Once we've got the house built, you want to start looking at the yard, the property surrounding the house. And most people, maybe you've got a dog at home. Well, you might want your dog fenced in. Maybe it's a fence you build, maybe it's an electronic fence, but you probably want some boundaries around your property. And in financial terms, I would probably call the boundaries, or the fencing, if you will, your insurance. Might be life insurance, might be your Medicare and your Medicare supplemental plans, might be insurance that you have on your assets to ensure that the value isn't squandered or lost in different things that can happen moving forward. So you want to have a good fence around the house to make sure that the hard work you put into building the actual house can remain protected and your financial future really comes to fruition in the way that you want it to. So as I go through all of this, I'm sure that a few of you thinking, well, I could just go ahead and build a really good foundation and call it good. That's okay for some, but you have to understand that if you steer clear of all risk, that you're really probably going to have some opportunity cost there. We know that historically the markets have done well over the course of time. We know also that markets can be volatile in shorter periods of time. So when you build your house, it's important to understand that these different pieces, the foundation, the walls, and the roof, as well as the fencing, are all assigned a different job. You're not going to have really an expectation that your foundation is going to grow like the roof, because your foundational investments are going to be safer, more conservative. Your investments that we refer to as the roof investments or the growth investments are not going to be as safe as the foundation. But when you build this house, you want to have the right foundation matched up with the right walls and the right roof. And that's really what financial planning is all about. Everyone likes different things when it comes to commercial building style or residential building style. But when we look at your portfolio, it's important that it's built in a way that you're comfortable with. Some people will want a bigger foundation. Some people will want a higher roof. Some people may want a house with a whole bunch of walls in it. And that's okay. That's why when you look at building your plan, starting with a strategy and figuring out what you want the end to look like is really, really important. So to sort of start recapping all of this, building your financial house really needs to include all the elements of your financial picture. It can't just be your stock portfolio or your investment accounts. That's why we do planning the way we do it here at Three Bridges, and it's comprehensive. We want to look at all of your moving parts to make sure that we can construct them in a way that you've got a really good, strong financial house. I would suggest that there are a few things you need to look at when you're in the strategy phase of what you're going to build here. And I'm going to touch on those because I think it's a really good recap of sort of what we've talked about, but also gives you a place to start. So the first element you need to look at from a strategic standpoint is the timeline. We all have different visions for the future. Some of us want to work till we're 70. Some of us want to finish up work as soon as we can. And if we can get done by 55, we're happy. So think about your timeline. Think about where you are now, how many more years you're going to work, and how many more years you want to play. So timeline's important. That's going to have a tremendous impact on how you build your foundation, which walls you choose, and how high your roof's going to be. Think about risk management. One of the great things about retiring is you get to relax. But if you don't have a good financial plan and you find yourself stressed out about money and finance and paying bills and medical costs and everything else every day when you wake up, it's not much of a retirement. It's maybe not a case where you're going to the same job you've gone to for 30 years, but you're still working, and you're working on things that you probably could have avoided with a little bit of planning. So let's look at risk management and make sure that you have built a portfolio and a financial house that's appropriate for you. Just because your neighbor has something that's got a really, really high roof, i.e. is super risky, doesn't mean you need to have that, and vice versa. Understand that once you build this house, just like the house you're living in now, and for those of you that have been in your house for a while, you've probably done a little remodeling. Maybe you've done it probably here recently, because it seems like remodeling's been the thing to do over the last couple of years with all the other things that have been going on. So understand that when you build your financial house, you might have to remodel it once in a while. Working with an advisor here can be helpful. You want to make sure that the house is still suitable. And if you've built your house and it's been standing and has served you well for a few years, you might need a little bit of a refresh. That might mean changing up the walls a little bit. Maybe you need different income investments. Maybe you need more income. Maybe you've gotten to a place in your life where you're feeling pretty good and you've got some extra cushion that you didn't know you had before, and you can build the roof just a little bit higher. Maybe you'll go after a little more growth with your investments. So remodeling is really appropriate and necessary for any kind of retirement portfolio, and make sure you stay on top of that moving forward. Things that are great one day may just need a little bit of a tweak the next. So it's an important aspect. Next is sustainability. You want to make sure that what you've built is sustainable. It's really easy to build this cool, exciting portfolio and take huge withdrawals every year and cross your fingers that the market's going to bless us with 10 or 12% growth on an annual basis. Well, it's probably not going to happen. So you want to make sure that your house, as well as your portfolio, is sustainable. You want to make sure that it can weather the elements. You want to make sure that it's going to last as long as you do. So those are all things that are important, and hopefully you've had a little bit of fun here with the analogy. I've tried to break it down in a different way. Not everyone likes to think about money in a money sort of way. It's kind of boring, and some people just aren't into it. So if you think about a house that's got a foundation, walls, and a roof, it might help you a little better understand how it is you build a retirement plan, and how you can make sure that you've got what you want moving forward. So I'm going to wrap it up there. I hope this has been enjoyable, and would love to hear some feedback, see what you guys think about this, and please subscribe to our podcast if you haven't yet. We're available on all the podcast outlets. You can also check us out on our website at 3bfg.com. All of our episodes are there as well. And we'll have another guest coming in next time. And want to thank everyone for tuning in. Have a good one. See ya.
Thank you for listening to When Good Things Happen. If you enjoyed today's show, visit whengoodthingshappen.com to share your retirement lifestyle dream, access information about our guests, and sign up for our newsletter. Be sure to rate and review us wherever you listen to your favorite podcasts. Three Bridges Financial Group is an independent financial services firm that utilizes a variety of investment and insurance products. Investment advisory services offered only by duly registered individuals through AE Wealth Management LLC, AEWM. AEWM and Three Bridges Financial Group are not affiliated companies. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying abilities of the issuing carrier. This podcast is intended for informational purposes only. It is not intended to be used as a sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual situation. Three Bridges Financial Group is not permitted to offer, and no statement made during this show shall constitute as tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by Three Bridges Financial Group.